In this S&P 500 analysis, we're going to analyze the S&P 500 using technical analysis to see if the S&P 500 is making a move toward its all-time high. We'll also analyze the stock market sentiment and the market internal to assess the probability of such a sustained upward move to the all-time high. In this index chart, you can see that all the major market index have moved up last week, especially the Russell 2000. The Russell 2000 continue to push higher, and also the Nasdaq 100 and the Nasdaq Composite is getting close to their all-time high. And the other major market indexes, such as the New York Stock Exchange Composite, the Dow Jones Transportation, Dow Jones Industrial, and also the S&P 500, all broke out from the consolidation area. As you can see on this weekly chart of the S&P 500, the S&P 500 is well within this megaphone channel started from the March low back in 2009. And for the week, the S&P 500 gained almost 89 points, or a little bit over 3%. And it is currently recouped 852 points from the March low, or almost 39%. And it is only approximately just a little bit over 10% from its high, or 349 points from its all-time high. From this S&P 500 daily price chart, we can see that it finally came up and filled this March 6 gap. And also it got above the 3,000 level. In addition, it closed above the 200 period moving average. And this is all happening under the optimism of reopening of the U.S. economy, but with a backdrop of escalating tension between the U.S. and China. So these two macro will be worth watching in the coming week and even the coming month. Is the market being too optimistic, and the reality will set in that show the damage that the shutdown has caused the U.S. economy will take longer than what the market anticipates to recover, and will the tension between the U.S. and China hamper the recovery of both countries' economy? And before we analyze the S&P 500 in more detail, let's first take a look at the market sentiment and the market internal and see what the stock market is telling us. Looking at the sentiment chart here, first is the put-call ratio. You can see the put-call ratio throughout the week, it was pretty much under the 0.75, except for Friday, it creeped up and closed at 0.8. But the VIX itself is all pretty much well contained under 30. And it haven't made much of a movement upward or downward. So that will be interesting to watch in the coming week. Will the put-call ratio come back up to the 1 level or even get above that? And will the VIX start creeping back up as the market or the S&P 500 inch higher toward the next level? And looking at the NYSE new high, new low, you can see that the new high, new low, the new high really have not been expanding for the last few weeks. And as the S&P 500 continue to grind higher. The NYSE AD line actually got the negative divergence. Remember last week we were talking about this negative divergence, and it did get resolved. So right now, as the S&P 500 push higher, the AD line also push higher. But on Friday, there is a new development of a new negative divergence here. So we need to be cautious about that. Keep an eye on that to see if it's going to develop into something more of a pullback, or will it get resolved just like the previous negative divergence. And for the Nasdaq new high, new low, you can see that not much have happened. And it is not much of an expansion, but if you take a look at the Nasdaq 100, it is getting close to this all-time high here. And the Nasdaq 100 is only 1.86% from its all-time high, or 181 points away. And the Nasdaq AD line, similarly to the S&P 500, the negative divergence also got resolved last week as the index pushed higher. But again, on Friday, it did have a little bit of a negative divergence developing. So we also have to keep an eye on that in the coming week. So let's take a look at the S&P 500 price action in a little bit more detail. You can see this gap here got filled last week, and also it made its move up above the 3,000 level and also above the 200-day moving average. Also, notice that this right here is forming a evening star type of candle pattern. And with the negative divergence developed on Friday between the AD line and the S&P 500, we could see a possibility of a little bit of a pullback and maybe come down and fill this gap before it makes its push up to this next zone here between the 3090 and 3136. In addition, I also put in a 78.6 retracement here, and this retracement is sitting somewhere around 3134. So that is well inside of this price zone between 3136 and 3090. So that is the upside scenario to keep an eye on. And for the downside, if this pattern causes to pull back, test the 618, and if we could not get a bounce off the 618, then we could see it come back in and possibly retrace back down to the 2791. This 50% retracement before we could look for potential support and see would it be able to bounce it back out to this retracement zone once again and try to make its move toward the higher level into this 78.6 retracement. Now let's go and take a look at the ETF for the S&P 500, the SPDR. Looking at the SPDR, the ETF for the S&P 500. Remember last week we were talking about this upside scenario. One of the possible upside scenario was for the S&P, the SPY to come up, fill this gap, and then get to the 300 level and work itself up toward this next zone here, up at this area. Let me update the profile here. So you can see updating at this profile with the latest prices, you can see that the point of control did not change. So the price that moved up, but the value remained constant. So that's one thing to bear in mind. Although the index or this ETF is continue to push higher, we have to watch, will there be some sort of a value area, a new value area starting to develop? In other words, that it will start consolidating for a while and build up value before it makes its next move. And updating this big volume composite, and again, you can see that the point of control did not change. And right now, we have the value area high up at this 317 area. There is the potential high volume node here at 313.1. So that could be the next area of potential resistance if the ETF, the SPY, could break through and move about this 308. Then we'll probably see a little bit of a resistance here at the 313 area. So here are the scenario for the coming week. On the upside is to continue to see this thing move up, take out the 308 and into the 313 before we see a pullback and possibly get down and retest this trend line here. Or the downside scenario is that it will start up here and start pulling back and get back into the zone and check this point of control down at the 281 before it get a little bit of a bounce back up. So those are the two scenarios on the upside and the downside that we will keep an eye on for the coming week. So in summary, the market certainly still have the momentum to push it higher. As you can see, the internal has not deteriorated, but it has not shown much of an expansion on the new high, new low. So as the market push higher toward the all-time high, that is one of the key internal to keep an eye on. Especially in the Nasdaq, with the new high, new low below 200. Nasdaq 100 is pushing toward the new all-time high. That is just amazing. How much of a divergence there is between the internal strength of the market or lack of it versus the index pushing higher, and that just basically just the weighting of the index due to some of the large cap tech stock. It's just been getting rotation from the FANG stock to the semiconductor stocks. So those are the two groups that basically been pushing the Nasdaq 100 back near the all-time high. So keep an eye on that and be cautious about that internal. And just keep an eye on the new high, new low. I think that's the key indicator to watch as the market approach the all-time high once again. So good luck. Thank you for watching and stay safe.